Hey guys, welcome back to Stock Tricks with Nick. How was your week? Did you get outside, get some fresh air, take a step away from trading for a second? Well, strap in because there's a bunch of market news to go over and a couple trades that are setting up pretty well that I want to cover. So let's get right into it. Over the weekend, OPEC, Russia, and other oil-producing countries, including the US, finalized a deal to cut production of oil by about 10 million barrels a day. The oil bulls were roaring over the weekend because this was exactly the news they were hoping for. Many oil stocks have been down over 30% since February, including Shell down 37%, ExxonMobil down 38%, and Marathon down 69%. Unfortunately for them, this move was already priced in because Trump had been tweeting about it the past 2 weeks. This was a case of buy the rumor and sell the news, because on Monday, many of these stocks were red. As people continue to shelter in place, the price of oil just keeps dropping. You see, the drop in demand far outweighs the drop in supply. That was until Thursday night. With Trump's announcement of a plan to open up the country again, the demand for oil might come back. And this was all the bulls needed to rev up their engines again, as all these stocks rallied 10% on Friday. But even with that rally, the sector closed flat on the week. That is what makes trading in this market so difficult right now. The volatility is there, but many traders are being shook out of their positions before they're profitable. On Tuesday, after the markets closed, airline stocks took off as they agreed to the terms of the first round of the bailout. The airlines had to agree to not lay off people until September 30th, and in return, they could tap into the $25 billion bailout in payroll support. But yet again, this was buy the rumor and sell the news. I myself was celebrating too early, as I had a call spread on Southwest Airlines that I bought earlier in the day on Tuesday. Now, I didn't start this position because I knew the agreement was going to happen later that night, but because the stock was holding up over its 8-day exponential moving average, finding some support with that metric. But at the open on Wednesday, the rest of the market was flashing red, and airline stocks quickly got grounded. Similar to oil stocks, airline stocks fell throughout the week until Friday's rally, but they still closed below last week's close. The big winners of the week were Netflix, Amazon, and Roku. Netflix and Amazon both hit all-time highs, as their services are in the highest demand ever during this quarantine. We'll take a look at Roku stock in more detail later on in the video, but each of these stocks jumped 10% or more this week. There's only a few things in this world more certain than the stock market railing on higher than expected unemployment numbers, and that trend continued on Thursday. The previous 3 weeks saw 17 million Americans file for unemployment benefits, and this week added another 5 million to bring us to 22 million in just 1 month. For comparison, the last 10 years, we created only 23 million new jobs. To combat these layoffs, the government started sending out their stimulus checks this week. Technically, they started sending them out last Saturday, but not to a large group of people. It wasn't until Hump Day rolled around when 80 million Americans got their stimulus check through direct deposit. If you haven't gotten your check, watch my video that covers all the reasons why yours might be delayed and a way to speed up the process. It'll be interesting to see what everyone's doing with their stimulus check. Are they paying down their debt? Are they increasing their emergency fund? Or are they just going to blow it to impress people on TikTok? Please just use it wisely. But if you are going on a spending spree, it looks like Grant Cardone has a lot to sell.
Now, on the rumors of my bankruptcy that is soon to happen, yes, it's true. Okay, I'm losing the plane, the condo, all the apartments, 8,000 units. Okay, all of it's going back to the bank. So if you guys want to get it before it goes back to the bank, call me.
The only thing more certain than a green market with high unemployment numbers is the ramp capital rally into the close on Fridays. If you're trying to start a short position, wait until 3:59 to do so. Otherwise, you're just overpaying for the position. I was definitely happy to see the markets close for the weekend. I was net short this week with a large put position in Lyft, so I was feeling great during the week until Friday rolled around. Lyft opened up 7% and bounced right around that price all day. But because it stayed below my exit price, I'm holding the put position over the weekend. If the stock's high on Monday is higher than Friday's high, then I'm going to exit the position for a smaller gain. With all the chop in the market, I'm starting to hit an exhaustion point. I think many traders are starting to feel it as well. We've been stuck at home for about a month now, and it's starting to get to me. Work was especially draining for me this week as I was trying to wrap up the Schedule P reporting. Thank God the actuarial exams have been canceled for the spring, otherwise that would have been another battle. Trading fatigue is real. Add on the emotional stress of the virus, and there are many reasons why you're not trading as efficiently as possible. And as we talked about in my last video, I'm known to compound my errors. So I need to take a step back from trading for a bit. I have a couple positions that I'm holding over the weekend, so I want to play those as best as I can. But after that, I might take the rest of the week off. Doing so is going to give me a chance to clear my head. For a lot of people, they have a hard time not trading every day, because every day you're not trading, you're missing out on money. But the thing that many people fail to realize is when you're not trading, you're also not losing money. If you're in the same boat that I am, just take a step back from trading. Maybe read a book about it. Right now I'm reading Market Wizards, and I highly recommend it. Even though I'll be taking the back half of next week off, I'll still be doing a market recap, so make sure you subscribe. But for now, let's jump over to the E-Trade platform to take a look at some stocks that are ready to break out in either direction, in ROKU, Tesla, and Boeing. The first stock I wanted to talk about was ROKU, and man, it had a great week this week. Last week, I noticed this large green candle, a close over the 8-day exponential moving average, and then each day the low stayed above that same moving average, so that gave this line some support. With much of my portfolio on the short side, I knew I wanted to take something on the long side to offset that risk, and ROKU was my stock. I ended up selling a put spread that would have its maximum value if it closed above $100 by the close on Friday. On Tuesday, it was already so profitable, near the maximum value, and I sold right away after it popped up. But even with me out of the position, I wanted to look at some technical indicators that I saw during this trade. So the low of the day on Tuesday, you could see it pulled back to this red line, and that's the 50-day simple moving average here. So again, having its low right on a moving average, I thought there might be some support there. The next day, it opened up right at that moving average again, put in its low, and shot higher. Then on Wednesday, again, it gapped up and stayed above this 200-day simple moving average. Now that I closed above this resistance point, it'll serve as support. And again, on Friday, the stock moved lower, but closed up over that support line. Right now, ROKU's getting pretty overextended, and with volume dropping off on Friday, this could be a good stock to short, but it still has too much strength for me to think about. There's easier shorts in the market, so make your money where it's the easiest. Speaking of an easier short to take on Friday, I wanted to talk about Tesla. Now yes, I know long-term Tesla's going to be great, but I'm a short-term trader and I'm looking for short-term opportunities. So you can see, again, once Tesla broke over this 8-day exponential moving average, its lows each day were higher than it. So it's in a bull trend right now. On Monday, we saw a long green candle close above the upper Bollinger Band. With additional volume, that's a good indicator that it's going to move even higher. Tuesday, Wednesday, Thursday, Friday, all at that upper Bollinger Band level. So why am I thinking about taking this short right now? Personally, I think it's just a little bit overextended. You can see RSI at 68.8. You can see the MACD printing its first red candle and volume low on Friday. All signals that this move has started to peter out a little bit. The other sign for me is this red candle close above the Bollinger Band. This usually signals that it's going to pull back slightly, at least at the open the next day. You saw it on Tuesday when a red candle printed, and then on Wednesday it opened up slightly lower. If we look back at the parabolic move up, there's many red candles outside of Bollinger Band, signals a move lower. Red candle, move lower. Red candle, moves lower. Red candle, moves lower. Now there is a red candle here and it moved higher. But trading is not an absolute game. It's a game of probabilities. So for me, this is a good sign that probability is on my side that this is going to move lower in the next trading day. For more confirmation of a pullback, you can wait for Monday to make a new low compared to Friday's low. If that happens, it's even more of a signal of a pullback. One thing I learned the past 2 weeks is you shouldn't have your entire portfolio either long or short. Try to balance it out. So let's talk about a stock that I think is ready to pop. Boeing got absolutely crushed in this market downturn. We saw how quickly it popped up, but then it got pushed down once it ran into the 20-day simple moving average here, pulled down lower, broke over that same metric that held it down last time, and has been just trading relatively flat. Now if we zoom in on Friday, we see a candle of higher highs and higher lows compared to Thursday's trading day, and a close above both the 8-day exponential moving average and the 20-day simple moving average on increased volume and a green MACD candle. As we zoom back out, let's look at some price targets. First, we have the high of the previous rally at 161.70, and then the one before that at 185-ish? Yeah, 185. So from 153 to 185, that's over $30 and more than 20% return. Now with the market being as shaky as it is, if we see a lower low and a lower high printed on Monday, then just get out of the position. But if Monday comes in strong with higher highs and higher lows, the trend is going to be up, and if we can start breaking over these resistance points, we can really start to see a recovery. But again, this is short-term trading, so if a trade's working against you, get out immediately. You can always get back in. Cut your losers short, let your winners run. Get out while you can. Thanks for tuning in to Stock Tricks with Nick. If you were profitable this week, leave a like. And if this wasn't your week, leave a comment on what you need to improve on as a trader and how you're going to do it. In the description below, I link my trading journal, my StockTwits, and Twitter accounts, so make sure you follow those. If you enjoyed this video, please subscribe to my channel, where I make weekly market recaps here and personal finance videos to show you how to make money and save money here. Good luck trading, and I'll see you next week.